Hello and welcome to another financial analysis video, and today I'm talking about Tyco, which just reported its fourth quarter earnings. And before we get to that, I wanted to just talk about the share price briefly. Tyco has dipped off of its 52-week low. However, the stock is still almost 20% off of its 52-week high. And from an earnings standpoint, the company has reported 61 cents per share, which meets expectations. And one of the things that I find interesting about this is that the earnings over a period of time have just kind of slowly built up. A year ago at this time, it was 56 cents a share. So there's a 10% increase year over year. And a year before that, it was 52 cents a share. So there's been sort of a consistent climb in earnings. Now, one of the things that I had to wonder about prior to doing this video was what was causing this downturn and why trailing PE is below the S&P 500. Right now, trailing PE is at 16.75 times earnings. Well, looking forward, analysts are expecting a little resistance next year. So we're going to see 48 cents a share, according to analysts, in the first quarter of 2016. That's down slightly from the year before. 52 cents in Q2. That's down. 61 cents in Q3, which is up, and then 65 cents. So a couple of quarters where we're going to see a little bit of earnings decline before things pick up again. And I think that's what's causing some of the hesitation in the stock price. Looking at the operating performance, however, unbelievably great operating performance. Return on equity is now at 23%, which is fantastic. Revenue growth down a little bit, and we'll have to ignore this part. This is in regards to the spinoff. But with revenue growth down slightly, 1.9%. However, with that being said, on a trailing 12-month basis, earnings continue to grow, even though analysts expect it to decline. So there's operational efficiency there. And so while there's some hesitation, I'm not too concerned on the earnings side. One area that does bother me a little bit is cash flow. Free cash flow on a trailing 12-month basis is now down to $224 million, and that is of concern. I think this is the metric that investors are going to have to watch, especially if you're concerned about the dividend. Again, this is post-spinoff dividend, which has been building. It's at a good payout ratio. But again, if free cash flow can't support the dividend, we may see it get adjusted. The yield is 2.25%, which is decent and slightly modest. But overall, I think Tyco is a company that is probably going to stick in the mid to high 30s over the next 1 to 2 quarters, unless there's a significant upward earnings adjustment or beat. But I think after that, it's a good long-term investment that investors should keep an eye on. Again, free cash flow really critical here going forward. I hope you enjoyed this video. Happy investing.